Financial partner AxisDirect. Simple hai.
Good afternoon and welcome to CNBC TV18's latest initiative, Get Rich. You know, we at CNBC TV18 have been traveling to different parts of the country with our previous initiative, Investor Camp. But this time we decide why not make our own Mumbaikas rich. So this is why with Axis Security, CNBC TV18 has launched Get Rich. And what a great time it is to be an equity lover. The markets are at an all-time high. The Nifty was above 9,500 this week. The Sensex is holding above 30,000. There was a time when we were dependent on DIIs, or the domestic institutional investors, to fuel our markets, put in their cash in the market. And now, well, they've taken a pause, just a pause, but the FIs are back in the markets. And so many things are going right. The monsoon forecast looks good. The earnings are trending largely in line with what the market was anticipating. We've got the GST rollout all set for the 1st July deadline. So things seem to be on track. The only worry is, where is that correction? You know, you still want that healthy correction, right? And that's not come through.
That's right, Rima. Everyone has been waiting for that one correction. Well, the correction's not coming. You see a 100-point dip and everyone says, well, let's buy into this market. So that's the kind of mood we are in. And over the last, couple of days or last week or so, we had so much of political turmoil playing out internationally. Well, we are lucky, really, because we have got our Prime Minister Narendra Modi making all the right moves. And in fact, we are the most stable if you take a look at any of those emerging markets. We went through demonetization, and Rima was just telling us that at that point of time, the FIs were pulling out. But take a look at the gush of liquidity that's come in there from our own domestic institutional investors. So things looking good. That correction really hasn't come about. Every dip is being bought. If you take a look at the last 3 years, Rima, everyone is saying, well, the headline index is up 25-30%. That's the Nifty and the Sensex. The mid-cap and the small-cap space has doubled your money just in 3 years. So the broader markets, they are looking very, very good. Specific opportunities, and people are making money. And we here at CNBC TV18, we have launched this Get Rich initiative, and we have our guest for you all. So we'll kickstart the show. We'll pull in our first guest. Then we'll have a question and answer session. And in fact, we'll look to answer all your queries. Let's get cracking then, Rima.
Yes, indeed. The first guest joining in to speak with us is Arun Thukral. He is a financial investor. He's been in the markets for the last many years in planning, giving investment advisory. He's with Axis Securities. So ladies and gentlemen, a big round of applause for Arun Thukral.
Good afternoon. So today I am going to talk about cultural shift. What is happening around us, whether we are able to get some benefit, what is the latest trend. So I think if you look at all these trends, then you are going to actually realize whether you have been able to capture those trends or you missed some trends. And what is the way forward from here? You know, earlier, most of our money, if I look back 10-20 years back, I think 80% of the money was going into roti, kapda and makan. Over the years, we have progressed, and now we have some discretionary spend. We look at other things, and how that is going to help us to be rich if we are investing in the right kind of companies. So I'll start with this. I remember my parents and grandparents, they were primarily living within their means. So they were never thought of investing in too many properties or investing in too many things, because major money was going in the groceries and other things. And finally, if they could invest, they were investing in one house. And for that one house, they were going to banks for loan. No other area they were taking any loans. And then all their life they will repay those loans. But look what is happening today. Yes, there is a huge opportunity in housing finance companies still, because there are more and more houses going to be built. If you look at budget, housing for all, or Prime Minister Resolve, so there are going to be huge activity in the housing finance. So this is obviously a good sector. But what else is happening? Now what is happening, people are even buying a mobile on EMI. borrowing is not a taboo today. Everybody wants to borrow. If there is a housewife, she wants to buy a washing machine, she is also buying on EMI. So everybody goes out and borrows. So then gives lot of opportunities to these companies which have been presented here. Some of the companies are in specific niche segment. Let's say people are even borrowing against their gold and buying certain things. And there is a huge opportunity because of financial inclusion also, because there are more and more people with bank accounts. So there is Aadhaar card, there is a mobile connectivity, and there are accounts. So it is very easy to verify the credential of any borrower. So these companies, which are niche companies, are always ready and immediately sanction loans. So there are opportunities in these companies. And the lower strata of the population, people, a vegetable seller and all, these people are also borrowing now. There are a lot of microfinance companies which have come. So these are the opportunities. So which are these companies? Whether we are able to invest in those companies, whether we are able to capture this wave, that you have to see. Similarly, earlier I remember we used to buy clothes and then we used to go to a tailor. He will stitch a trouser, a shirt, and even the innerwear or kurta pajama. And if that tailor is missing, then we will wait for that tailor to come back if he has gone to his village. But nowadays what happens? We just go to a shop. We know our size. So I know my size is, shirt size is 42. So I just go and buy. I don't have to wait. Whenever there is a sale, I will tell somebody, if you are going, buy 2 vans and shirts, 1 trouser from this particular brand. So that has become so easy. So which are the companies who have benefited? So whether you are able to capture that wave, even innerwears. So I think this is happening all around us, but whether we were able to capture this cultural shift or we were still investing in the old companies, I think that is what we have to look at. Again, earlier the lady of the house was at home. She was cooking for us. She was rearing children for us. But nowadays, every woman is working. There are nuclear families, both the people in the house going out and for the work. And then what they do? And even the branded stores, I think I have taken this point, so let me complete. So this lady now is buying a Whirlpool machine. This lady now is getting a pizza. If suppose the couple is coming home late, they were just ordering a pizza. So again, whether we are able to capture that. Nowadays, whenever a girl, we don't even ask whether she is going to work. We generally say, where are you going to work? We don't give any option to the girl child, or it is understood that the boy child and the girl child both are going to work. So I think that change whether we have captured. Now coming back to this. So in clothing, what I told is happening, but if you look at your daily purchase of grocery, your monthly purchase of grocery, even the jewelry which you are buying, you are going to a better showroom, an organized showroom. Even in a grocery store, you are taking your kid along because there is an AC atmosphere, kid is also playing, there is a food court there. So this change is happening all around you for all these years. And these companies are buying things in bulk. All this, the Kirana store, they don't have that liberties. So I think this is another area whether you are able to capture this wave that you have to see. Now entertainment. Earlier I remember we used to go for a single screen hall and then we used to wait. A new movie is released, there are 4 shows. Maybe you have to book in advance and sometimes you will not get a ticket for a Salman Khan movie, you will wait for one week or so. But now you can see, you saw Bahubali, how many screens? Thousands of screens. And we are ready to spend. So whether we have seen the transition from single screen, then going to a cable TV, and then finally realizing that it is an outing. And again we have come back to theaters because we like the experience. So there are companies there, whether we are able to capture that wave. Similarly, for a vacation, earlier we will take 15 days leave and then book tickets, then there will be a waiting list. Nowadays, we just decide there is a long weekend of 3 days and then we book a ticket and we go by air. So I think this is happening all around you. Then there are theme parks, there are families coming there. So there are companies, whatever these opportunities, there are actual companies which you can see Whether you are able to capture this or not, you have to ask this question yourself. Now education. Education, people are investing a huge amount. If you go to a coaching institute or any college and whatever the teacher or principal asks, you are ready to pay. People are investing in a kid's education, right from KG, from primary school, for college education, for IITs, IIMs. Everywhere there are coaching institutes, there are companies, there are content companies, and we are just paying the money. Because the country has progressed, you have more money available also. So again, there are companies, whether you have got into these companies, you look at that. Similarly, health. So I always say that any money invested on education and health is an investment. I also believe in that. And nowadays, earlier people used to go one hospital, then wait for the doctor. Now because they have more money, they go to specialists. And because of urbanization, there are a lot of lifestyle diseases. So people have more cholesterol, people have more obesity, people have diabetes. So I think this is happening all around us. You can see, you can relate with this. So then, where is the opportunity? So there are companies where these opportunities are there. And then there is a subset, which is diagnostic center. So you go to doctor, he will give you 5 tests, and you happily pay. You don't even ask. You are going for preventive checks. So all this is opening opportunity for you, and this has not happened today. This has happened over a period of time. That is the cultural shift I am talking. Again, whether you are able to capture any of these companies. Telephone. So earlier there were landline. I remember there were only one landline in the house. Sometime in 3-4 houses there will be 1 or 2 landline, and then they will say somebody will call after 10 minutes, you come back. And we used to go and wait for our call. I don't know how many of us have landline. Can you raise your hand? How many of you have landlines? So not everybody. So now what is happening? There are 5 members in the house. There may or may not be a landline, but there will be 5 mobile connections. And mobile is not only for talking. Talking is only one of the functions. There are so many other things you do with mobile. In India, there are 100 crore connection. Out of that, 27 crore is smartphone. So you can play games, you can order grocery, you can order anything, you can do shopping. Hundreds of things you can do. Social media, Facebook, Twitter. So I think you have to see that which company is going to benefit or which related company is going to benefit. You have to capture that wave. Look around you. Now what is the emerging culture? So these are the things which I think you all agree you have seen. Now what is going to happen? So obviously this also we know. So there are some companies which are listed, some may not be listed. So are you ready for this wave? Because if you can buy on a Flipkart or an Amazon everything, so sooner or later traffic is going to shift. The way digitization is happening, entire traffic will go there because it's much cheaper. So there is a Flipkart sale, you get a Van Heusen trouser at 30%, 40% discount. You don't have to step out of your house in this city of Bombay when there is huge traffic. You don't want to get into the gullies and with your car. You will just sitting at home and you will buy. So look at this, if this is going to happen. So this is commonsensical. Obviously you will talk to an expert and look at the financial, look at the corporate governance management, and then you will invest. But this is the trend. Insurance is a huge opportunity. We don't have that kind of insurance penetration in India. So there is a tax benefit available. There are low premiums, and even health insurance, the kind of hospital bills, the kind of doctor fees. I think most of us are going to an insurance company and buying an insurance for us. So huge opportunity, whether it is on life insurance side, health insurance side. So are you going to invest in some insurance company? Is this going to be the next theme? So I'm giving you a food for thought. Tourism. Earlier we used to go near our place. So we'll go to Lonavala, Panchgani, Mahabaleshwar, Matheran. Now if we have 3 days, we will go to Bangkok, Singapore, Malaysia. It is becoming so easy, so common. So again, which company is going to benefit? And it's going to happen. People are not going to wait for those vacations or those weekend getaways. In 3 days, you can go anywhere in the world. If the travel time is 3 to 4 hours, there are huge options. So there are companies which are going to benefit. So keep looking at these companies and keep looking at these opportunities. So now change is the new constant. I think that's what I told you. And observing the changes around you to research, I think these are the things. Early recognition of trend can lead to multi-baggers. Obviously, you have seen some of the names which I have shown have become multi-bagger already. Whether you have captured those multi-baggers, I'm not sure. Some of you must have captured some of the names, but not everybody, all the names. So I think we should strive for that. But what is it that in India only 3 to 4% are actually investing in equity? Forget about investing in the multi-baggers. People are not investing in equity in spite of equity being the best asset class. So what is that which stops you? So I always end with a yogic concept. So I say, because of investor psychology, we are not able to make money in India. In any other developed country, it is 15-20%, we are 3%. And we look at Western gurus. But look at our own gurus, look at Patanjali, look at yogic philosophy. It talks about 5 states of mind. It says, if you are in the first stage, which is disturbed, shift mind, that means you are not able to decide anything. You are a restless monkey. You are jumping from one asset class to another asset class, one share to other share. Somebody tells you, you buy this, you buy that. Somebody says, buy this property, commercial property, residential property. So there are so many people and you are not able to make money anywhere. So that is the first stage of mind. So if you are here, you have to improve. The next is slightly better, but it is mood state which is dull, which is inertia. You have just keeping the money somewhere. Somebody is keeping in bank account, somebody bought a house somewhere in 2-3 cities, there are 3 properties lying, but is not doing anything. But sometimes they are lucky. If somebody bought an HDFC shares or a Wipro share 20 years back, he may be lucky, but very few such examples. But these people generally are lazy. Sometimes they will act, most of the times they will not act. So I think this is also not a very desirable state of mind. Third is Vikshipt, which is distracted but occasionally steady. I think many of us will qualify for this. So we will be steady at some point of time, like we are steady now. We are all thinking we have missed something. It's a good thing. I would have captured this wave. But maybe once we go home, by the evening time, we will start forgetting that. So that is called occasionally steady, but mostly we are distracted. So again, this is a stage where most of the people are, but you have to go to the next stage, which is one-pointed. That means you are looking at companies, you are observing the trends, you are getting into the right kind of companies, and you are staying there. In occasionally steady, you will buy a stock, but you will sell it. But if you are one-pointed, you will hold that stock for a longer period. So I think this is the desired state of mind. And finally, the mastered. Mastered, I am not saying that we should strive, because many of us will not reach there. Very, very few people will reach. So Warren Buffett may be a mastered kind of a mind, but most of us are in third stage. Let us reach into the fourth stage. And the best part is that you can actually improve if you have the right kind of training, right kind of meditation, right kind of focus. So that is why I always use yogic analogy to explain investor behavior. Thank you very much.
All right. Thank you so much, Arun sir, for joining in and in fact giving us that thought-provoking speech and relating the changes in lifestyle to the stock market as well. Please put your hands together and thanks so much. All right. Our next guest is someone that I've grown up looking at on the television screen, and it brings me great honor to call upon on stage Mr. Divyen Chowksy. Please put your hands together.
Good afternoon to everybody. Thank you CNBC for inviting me today here to share my views. In next 15-20 minutes, I'm going to talk to you about how to get rich. Imagine how simple it is. Well, 3 decades back, I'm remembering first, I think Arun said something about how the things have changed. And I think he put me back into my era. I think some 3 decades back when I started, I distinctly recollect, I think 2 individuals, I think, who started together. One, of course, was Sachin Tendulkar, legendary batsman, god of cricket. And second person is, I think he's standing in front of you. So we started together our career. Sachin played fantastic cricket. I used to play cricket, and I also started with investment activity. Somewhere, I think we traveled together. In 2013, Sachin retired. I continued to bat on, and I'm here with you. I am going to reveal this suspense as to why I am betting on why Sachin retired in 2013. So, of course, Sachin's story, I think you are going to get it, I think, on 26th. The new biopic is coming up for release, Sachin, A Billion Dreams. So that movie is going to tell you more about Sachin. As far as I am concerned, I have no movie to say anything about. I am live in front of you. So enjoy. My journey started after my graduations, learnings, whatever you want to call it, as academic career. I started as a stockbroker and an investor. Coincidentally, I think I was also doing some other activities, including developing the softwares for the financial markets, etc. And ended up, I think, starting the research activity in a very structured manner. In those days, I think research was unheard of, equity research was unheard of. So I started that way. Fortunate enough, I think I ended up handling the entire activity of, I think, digitization of the stock markets. And must say proudly today that in those days when we started, the stock market volume used to be somewhere around 100 crores per day. Market capitalization must be less than 10,000 crores. Today, as we speak, the stock market volume per day is anywhere close to 7 lakh crores. From 100 crores to 7 lakh crores in a span of around 20-25 years. And market capitalization has fallen to $2 trillion. I attribute this particular growth in the stock market largely to the digitization process which took place in those days. And it is this digitization, which ended up creating the mother of all e-commerce or digital markets that we are talking about today in those days. A fantastic journey which began at that point of time, which displays a 100-year-old market system which used to be open outcry system and changed into a complete digital markets, which is what we are in today. So friends, I think the first point which I am putting across to you here is, in last 3 decades of learning, the first thing that I could learn in those days, it is the disruption which builds the wealth. From less than 10,000 crore market cap to 2 trillion crore market cap journey, in a physical open outcry system in the stock market, the things change through the digitization process. Today we are seeing tens of billions of dollars coming into the retailing segment in e-commerce segment, something which I will talk about subjects like Flipkart and Amazon and other companies. And I think we should probably say that it is this disruption which took place in the financial market which started producing the wealth. This journey continued. As I look into it and I see this journey continued. If you recall, I think somewhere in 90s, late 90s, Amazon came up. You refer to that subject. They started the e-commerce segment, started selling books, displaced, I think, the established book players like Barnes and Noble in the US market. Today, company like Amazon would be, I think, more than $450 billion US market cap company, selling anything and everything that you want to have it onto the digital platform, an e-commerce platform. In fact, between Amazon and Alibaba put together, you have got a market cap of somewhere around close to 650 to 675 billion US dollars. Came in Apple. They came in with their Mac machine, and you found that I think they displaced almost all the PC manufacturers. Subsequently, the likes of IBM, the HPs, Dell, Mac became the machine, I think, which probably people started buying because of the simplicity of use. Apple is today about 750 billion or $800 billion plus market cap company today. The market cap of Apple is more than the entire market cap of our Sensex 30 stocks, I believe. What Apple has done, they've also disrupted the trade. They brought the music, displaced all the magnetic tapes and the CDs, and brought that music into the iPod. Subsequently came up with the iPhone, the iPads, and now on the cloud they are putting across tons of data and applications. Came in Google, started off as a search engine. Today if you look at Google, they probably have some of the finest discoveries to their credit which is coming up, including autonomous car, including the medical science which is going to be taken care of. They are more than $600 billion market cap company. What did they do? What are they doing? Their main revenue earning is from advertisement, the largest advertisers of the world today. Almost all the famous publications are out of the systems. Microsoft, the most conventional name in those days, probably I think shifted beyond Google and the Apple, still commanding the market cap of $300+ billion and have changed the business model to cloud-based business model. Thanks, Vikas. Came in, I think recently, I think in few years back, came in Uber. Typically took birth out of a situation wherein the founder of the Uber found himself helpless when he could not pick up taxi. So he brought in the subject of aggregators, taxi aggregators business. Ultimately displaced all the taxis which were plying on the road and probably I think started using the private cars which were remaining idle as a model to give services to the customers. Tesla came up later, brought in the electric vehicle with them. Successful, why? Because they adopted the green technology, the electric vehicles, reduced the moving parts to only 18 from what the combustion engine would have of more than 300. So significantly changing the entire game plan, and today electric vehicle is becoming the order of the day. Some of the countries in the world, they are planning to go completely electric by 2025, 2030. What am I talking on this subject? I am saying something that in last 20, 30 years, in front of your own eyes, if you see, some of the marvelous disruptions have taken place. The companies have brought in a complete change in the way in which we experience the subject. Typical disruptions have taken place. Put together these 5-7 companies which I talked to you, their market capitalization in last 7 years, in last 20 years, 25 years, has moved to $2.5 trillion, just these 5 to 7 companies. Imagine the amount of wealth that they have created. In fact, I think this data may be of use to you because we are in the business of getting reach. These 7 companies among themselves have produced wealth of $2.5 trillion, the market cap, at an average growth rate of around 55% CAGR basis. That means year-over-year basis, 55% growth they have produced in the market wealth. This is the power of disruption, and this is where I think I belong to. I believe that I think in this era, you are likely to see the disruptive approach in each and every subject that we are looking at for creating wealth. You will have to look at the disruptions. I think difficult disruptions which emerge in the various areas of activity. Now, when you come back to India, you find that we have typically started the similar kind of an approach. Bring up yourself to, I think, some 40,000 feet elevated level. See how exactly I think this country is planning their entire growth program. They started 3 years back. They started announcing different projects. Most of us, I think, would read these projects in the newspaper, but probably will not reach beyond the names. They started these particular projects, different projects they started with. Make in India projects, Clean India projects, Skill India project, defense, railways, integrated infrastructure. And we all will think that I think these are all big names. I think it will happen somewhere down the line. But it is due to this project that the company has spelled out a program of about more than $3 trillion of investment in foreseeable future in next 5 to 7 years time. And the growth rate that is being talked about is 7-8% and now going up to double digits. Whereas the entire world is not growing, the country has planned a program wherein we are going to grow in double digits. Again, I think a way of working is quite disruptive. Here I would put it across that when the disruption meets discipline, you produce magic. This is what I think we are likely to see here in this country, wherein $2 trillion worth of market cap is expected to go up to and get doubled to $4 to $5 trillion by 2025-2030 period. And various subjects I think which we can keep talking about, but for the want of time I will not touch upon in length, but the subjects like renewable energy, subjects like insurance, subjects like defense, subjects like railways, integrated infrastructure, road, railways, airports, seaports. All of these subjects are coming up in a big way as far as I think the growth in the economy is concerned. And this is where I believe the opportunities are going to come out from. Individual companies would come out from such kind of major themes which are emerging very fast. So on one side, if you look at the global experience, on the other side, I think you look at the potential that the country is providing to you for the growth in coming period. My reading says that if you spot opportunities early, some of the opportunities I think I talked about, those investors who spotted it early, I think they have made fortunes out of it, right? So if you spot such kind of opportunities early, probably I think you get the best out of your investment program. So I started with that why I am going strong and I am not retiring. So I am just trying to conclude, I think that part of it after giving you this perspective, that when 3 decades back, when I started at that point of time, the Sensex was somewhere around 800. The US dollar was at 19 rupees. The petrol would somewhere less than 10 rupees and diesel would be less than 5 rupees. Gold would be somewhere around 3,000 rupees, I suppose. Today, if you look at the change which has happened in last 30 years, the Sensex has grown 40 times. From 800, it is now 30,000. The gold has grown 10 times, 31,000. US dollar has grown somewhere around 3.5 to 4 times, 64, 65 levels. And petrol and diesel have grown 7, 8 times from what they were at that point of time. Friends, I can keep on going, keep on talking and continue with the subject. My whole point here is that it is this power of equity which produces wealth. Even when you look at the global markets, $1 invested in year 1900, if you count today what is the value of $1 invested in 1900 in Dow Jones, probably I think you would find some phenomenal figure in front of you. I have not updated my analysis in last few years, but somewhere I think 5-7 years back when I saw that the $1 invested in 1900th century in Dow Jones, probably the value of that dollar is 17,000 rupees at the end of century. The power of compounding at 15% has helped the dollar to value at that level. So that's the reason for which I am going strong. I don't plan to retire like Sachin. If you want to play, continue playing like me and Warren Buffett till the end of your life. This is the time to enter into the market. Don't look at where exactly the market is, what exactly the index is. There are plenty of opportunities available in the market. And one last point, I think for some of you, those who want to retire before Virat Kohli, those who are trading in the market, they will certainly get retired before Virat Kohli because you will get hurt out. Thank you very much.
Thank you, Devin, for that. That was the power of disruption. But later on, you've got to tell us where you see these big disruptive ideas in the equity markets as well, so that all of us can invest in them. But anyway, let's move on that note and invite our third speaker, the co-MD of Prabhudas Leeladhar, Mr. Dilip Bhatt. A warm round of applause, please.
Good afternoon, everybody. Thank you, CNBC. I think CNBC has coined a very catchy phrase, and that is get rich. I think all of us are really looking forward to get rich. Really speaking, what is the advantage? One of the advantage of getting rich and having money is that all your faults are passed off as eccentricities. If you have money, people are ready to forgive all your faults. They also say that money is not necessarily the most important thing in the world. They say love is the most important thing in the world. But we all of us are so practical. So we say that we love money. And now that we all love money, let's see how we can really go and make that money. Sorry, just 1 second. Sure. There is this slide which I have just put up. Now this says, how can you get rich? This is the wealth which has been created by the Indian equities. 1981 to 1990, Sensex has grown 7 times. 91 to 2000, 4 times. 2001 to 2010, 5.2 times. And the story continues. The trajectory continues. What story does it tell us? That if you really want to make money, you have to stay put with the equities. As like George Soros said, if investing is something like you're entertaining yourself, then you're not making serious money. As Paul Samuelson said, that if you have to really understand what investment is, it is like doing your own painting and waiting it to get dry, or to see the grasses grow. So it becomes a very boring job. But most important is that you invest in equities, hold on to it, and then reap the rewards. I think most of us would have seen that If you just open your portfolios and see that what has made money, the stocks which you have held on has really given you a good returns rather than something where you are traded. It doesn't matter one or two stocks have not really performed well. If the basket of your stocks have done well, I think you are there. Thoda aage, thoda piche, but you will definitely be there making money. You know, it's like an analogy which I can give, that you're taken a train from Churchgate and you want to go to Virar. And when the train starts, maybe the train is little slow and then you see some train is going fast. So you decide to get down from that particular train to any of the stations. And that is where the investments which you make, and if you do that, you make a mistake. Because you're getting off the stations and forgetting about your ultimate destination. So I think one of the ways to make money is buy, hold, and wait. And that is what is really going to help. Now, when we talk about the dilemma of the investors, when we are talking to each other, it is very clear that the investors have a lot of dilemmas right now. We are looking at indices scaling new high. So what do we do? Whether we wait, whether we invest now, later, where to invest, fear of the future. I think this dilemma of the investors can be very well captured in some of the contradictions which is there in the current scenario. We have seen the earnings growth, which is not very robust. You know, we started off 2014-15, when I say we, meaning the entire investor fraternity. We started off with an earnings growth expectation of something like 20%. What came was merely 4%. Again, 14-15 happened, 15-16 we started, we said earnings growth once again can be around 20%. Can you take a guess what was the earnings growth that year? It was negative 4%. So this dilemma continues, that prices are going up but earnings are not catching up. So that's the dilemma that investors are facing. But against that, there is a very solid GDP growth. Markets are awash with liquidity, but credit growth is at a 50-year low. Capacity utilization is low, but FDIs are at a record high. So against this dilemma, I think we should really congratulate this government. This government really deserves a very special mention and special praise, that with this kind of vulnerable situation that not just India, even the world is facing, they have managed to give a lot of confidence to both the people of India as well as the foreign investors who have now started looking into India in a big way. So what gives us the confidence about India? I think one of the most very known factor is that India is really growing very fast, perhaps the fastest at the moment, if you were to omit some of the smaller countries. I think another part which really gives a lot of confidence is these four factors. As what I said, the GDP growth being so solid, CPI, consumer inflation, being one of the lowest, fiscal consolidation being very much as per the plan. Controlling fiscal deficit is something which all the big long-term investors really like, and even the current account deficit. I think first time after maybe decades, equities have come back to a very sweet spot. All the competing verticals, asset class, I think they are losing their sheen. Whether it is real estate, in the last preceding 10 to 12 years, a lot of money went into the real estate. We saw that people were either purchasing land, real estate, or whoever had some money, they became builders. And we always heard those fancy stories about the astronomical returns people got. But now I think one thing is very clear, that real estate is not a very liquid asset, and returns have really sobered down. I think more than sobering down, it has become very muted. I think the FDs, fixed deposits, less said the better, with the falling interest rates. And of course, gold. I think gold has also lost its glitter world over. So I'll just quickly come to what are the top themes that we think can work in this particular, in the coming few years, which will help us make some wealth creation much more than the others. I think financials is certainly one of the things which is leading, and financials has changed from just being a bank and then from being a private bank to more of NBFCs and microfinance companies. I think some of the business models which are emerging are very robust and very strong. I think another two sectors, healthcare and aviation, looks pretty good and interesting. Particularly, healthcare doesn't necessarily only mean the pharmaceutical companies. You have the likes of Thyrocare and Dr. Lal's. Rural and infra play continues to be pretty good, and that is what we should always look at. As what Devin was just very rightly and very nicely explaining, India is not just reforming, India is also transforming. It is from a reform to transform. We have seen that how the entire DIIs, mutual funds, insurance companies, all of them have been pumping money into the market. There's so much of money which is flowing into the mutual funds. I think the mutual fund SIPs stood at 1.35 crores, and the total amount collected through SIP during April was 4,269 crores. So I think we are all looking at how this kind of money can really provide a solid tailwind and can help the markets grow on a longer term basis. We prefer to look at the market as a big channel. We have to see whether the channel is upwards. And within that channel, you will find enough movements which will give some correction. But so long as the channel is one of taking a northern trajectory, I think it deserves one to invest in this particular market and remain invested. Now, before I just come to a few ideas, which stock ideas, I think some of the important points that we follow for the purpose of investment when we select any company. You know, we look at the return on equities, we look at free cash, we look at bandwidth of the management, and fourth, the capital intensity of the business. In my experience over last 15 years, I can say that bandwidth of the management is perhaps one of the most important things. You know, 2004 to 2008 was such a golden era. It was like never before, possibly never after. We saw how the stock markets went crazy. All of us were recommending a lot of companies. including us, what we found out was that there were so many mid-cap companies which really did pretty well. For example, I just take a sector, infra sector. We had quite a few companies which we saw from being a 300, 400 crore company to being a 5,000 crore company. We all got so excited by that growth. From the order book position of this infra companies, from mere 500 crores, it went to 10,000 crores. But we all forgot in the process, when we were interacting with the management, all of us just did that Excel calculation, extrapolated, that this is the kind of growth, 2 years, itna growth aaya, and for next 5 years, they'll continue to grow. But our very hard and bitter experience about some of these companies has been that the management bandwidth is not very adequate for them to really negotiate through this particular growth. Why I'm telling this is because even today, once again, the mid-caps have really started going up. And, everybody is so excited and everybody wants a mid-cap idea. I think so far, so good. But at any point of time, every one of us should focus whether this management is growing very well. They'll grow 20% this year, maybe 40% next year. But whether on a 5-year basis, whether they can grow like that. And that is where the dilemma comes, that we have to really take that call. And that's possible once you really know about the management, interact with them. So I just said these 3 points: ROEs, free cash, bandwidth, and fourth, of course, the capital intensity of the business. Very broadly, I think these 4 ideas is what we really like. Of course, there are so many other stocks. For example, Britannia. We first recommended Britannia when it was 400, 450 rupees. So the question that comes is, did we see that it can go up to 3,000, 3,500? Very frankly, no. But once you own a good business, once you recommend a good stock, you have a certain targets. But what you do is, you closely monitor them, and then you keep on revising those targets. For example, Britannia, when we recommended, maybe we thought that 1,200, 1,300 would be good. Now the way it has moved up is something which really surprised us. But when we started tracking the yearly performance and then going forward on a rolling basis, we thought that this stock was good and still has a good scope to grow over next 3 to 4 years. Why? Very good. 40-45% is the ROE of the company. It generates almost 20-22% of the sales as free cash. And fortunately, the management has really demonstrated a good ability of themselves to perform. I was talking about this healthcare segment. There is this ThyroCare. Now, ThyroCare is basically in the diagnostic business. There are, at the moment, only maybe a couple of listed players. ThyroCare, Dr. Lars, and maybe to some extent Fortis. Our understanding of this business is that maybe in next 7 to 8 years, each of these companies have the potential to grow up to almost $1 billion in business terms. Now, once again, the same question comes whether the management bandwidth is good enough. But our call broadly is that some of these managements are doing things in a very good and a professional way. I think the other 2 companies, L&T Financial Services, we think that from here on, the company still will show a reasonably good growth, a good EPS growth, good profit growth, and of course the ROEs will start coming. And fourth, Glenmark, a little contrarian call. It has taken it on the chin in the last 1 week or so, but we still feel that from here on a risk-return basis for next 2 to 3 years, this is a stock which can give very good returns. They have got some very good approvals which is happening. They are on debt reduction course. And of course, we are all looking forward for the company to generate a serious amount of free cash. I think with this, I would just like to wind up, and I would just say that, yes, equities continue to be will continue to be the flavor for some more time, and I think we all should remain invested in the equities and not allow our short-term investments to become long-term investments by default because they are in losses, and we convert our long-term investment, which is profitable, and we book profits in them. With this, I would just like to conclude. Thank you so much.
Yes.
All right.
Financial partner, AxisDirect. Simple है.